about 3% last week to close out at 98,101. Apart from that, the dollar is what I think Neeraj also would like to talk about. Coming in from Trump on X, of course, not very good in terms of what he's saying. I don't know whether he's concerned, whether he's worried, but making statements such as warning BRIC countries that they shouldn't be looking to creating a replacement currency to the dollar, or they will bear the brunt of very, very hard-hitting tariffs from the US is what the dollar trade was. Dollar last week, remember, had a fall after gaining significantly over the last 8 weeks. Now, the reason the dollar could potentially be falling is because we're getting closer to a Fed rate cut on the 16th of December. But apart from that, we don't really have very much on the currency trade. Emerging market hard currencies have been under pressure. This is because bond funds have been seeing aggressive outflows for 2 months in a row. So it's not just equity markets in India that have been witnessing outflows from foreign investors. Bond funds as well in the EM pack are witnessing outflows as money clearly moves back to the US. Crude looks good, down about 3% last week. Geopolitical tension is easing, so all that put together, we aren't looking too bad this morning. But I think Trump is the man of the hour in many ways.
And so much of India data too, as Samina highlighted. I mean, the Indian GDP data wasn't the strongest, but the GST collections have looked okay. So there's lots that's happening. But let's go across to our guest, and let's go across to our guest with this post from Donald Trump on the platform X, wherein he said that the idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar. They will face 100% tariffs. They should wave goodbye to America, is how he ends the post. Kungo, head of Asia Research, ANZ Research, Johnson right now to talk about this and lots more happening around the world. Remember, as Samina said, geopolitical concerns are easing as well. But Kun, good morning to you. Thank you for talking to us at NDTV Profit this morning. I mean, what do you make of this? We are entering a 4-year period wherein more eyes will be on Donald Trump's X handle than a lot of other things. But, I've agreed this is negotiating tactics, agreed, this is rhetoric, but some of it might be actually used in a very effective way because of what's happened recently when China issued the dollar bond as well. Just try and break it down for us. What do you make of such a post from the President-elect of the United States?
Good morning to you. Well, there's no doubt that we have to get used and accustomed to these kinds of outbursts on social media from President-elect Trump. And I think it's a reminder of what the next 4 years is going to be like. Now, in terms of, his latest pronouncements, there's no doubt that he loves tariffs, but his usage of tariffs now looks to be very different from his first term. In his first term, he imposed tariffs against China, which started a trade war. This time around, the tariffs that he has proposed is conditional, and is conditional on him trying to get other countries to do what he wants. In the case of Mexico and Canada and China last week, it was around the movement of illegal migrants and drugs, and this is threatening 100% tariffs against them if they were to move away from the dollar. So clearly, the tariff is a big stick that he's building to try and get countries to do what he wants. I think in the issue of the dollar, there's no doubt that there's been a shift towards trying to reduce reliance on the dollar by many countries, particularly in the emerging market space, because there was concern that the US has weaponized the dollar. It's very clear, of course, that Trump recognizes this as a huge threat. The US as a reserve currency is in a very privileged position, and that privilege will be eroded if the dominance of the dollar as a reserve currency were to be under threat. So I think he's being very preemptive here in trying to ward off and starve off any attempt by other countries to move off the dollar standard.
Take a cue from what you said, and assuming this is not empty threats coming in from the incoming president, the hottest trade in 2025 then becomes the US dollar. But history shows that when the dollar gains strength, it turns out to become a hindrance for equity bulls. In that case, do you think the phenomenal run global equity markets have seen in 2024 may not continue into 2025?
Look, I think we have to distinguish between the dollar as a reserve currency and the currency fluctuations. The dollar will remain a reserve currency, but that doesn't mean the dollar can't weaken. And we've seen that time and time again. After all, the dollar does move in cycles. So at the moment, the dollar is extremely strong because of the tariff threat and the fact that the US economy is doing exceedingly well. But we do expect the Fed to still deliver another rate cut in December. And I am still of the view that the easing cycle is not done yet. So I think we're going to get further rate cuts from the Fed next year. I think that should help some moderating impact on the dollar. We expect the dollar, to ultimately still be beholden to the wider Fed policy. And on top of that, in terms of the U.S. economy, if the tariffs do get imposed, as what President-elect Trump is threatening, that's inflationary, but it also can have a softening impact on the U.S. economy as well, which might start to pull the dollar slightly weaker. Lots of moving parts, of course. I think the only thing that's certain is that we're in for a period of heightened volatility.
Koon, just one question. I mean, crude prices are cooled off because, amongst other things, Ukraine saying that if there is a NATO guarantee, then we are happy to end the war. We don't know how this will shape up, of course. Russian and Syrian jets are kind of also doing another conflict, if you will. But do you believe that geopolitics will not necessarily flare up the commodity universe, or could that still happen? Because of late, we're seeing more signs of an end to the geopolitical issues as opposed to them flaring up.
That's exactly right. I think we are much closer to the end of this long-running conflict than anything that we've seen recently. And I think market is starting to take heart from that, which is why we're starting to see that geopolitical risk premium getting unwound. In addition to that, the Middle East tensions also look to have subsided. And on top of that, we know that President-elect Trump's policies in regards to energy policy in the US is to, in his words, drill, baby, drill. So additional supply from the US also is another factor that is also weighing on crude oil. So that's actually quite positive, particularly for emerging markets and particularly for oil importing countries like India, because with oil prices well behaved, there's less issue in terms of the threat to inflation, and it can also help the overall external balance of payments position as well.
Thank you very much, Koon. You have a good week, and we'll see you soon. Up until then, it's also happy December, so have a good festive month ahead.
Thank you.
Well, that's of course a global sense coming in from what's happening with Trump. And of course, Chinese data that looks fairly promising now for a change in terms of the PMI data that we've had. Back home, markets started the December series on a strong note. But Neeraj, you and me were discussing this just before we went into the weekend. And historically, from the look of it, and we've got the data which we can pull up very quickly on the screen to give you a sense of what December has looked like historically. I think 8 out of 10 months, 8 out of 10 times in the last 10 years, we've actually done quite well. So if you go back all the way to 2016, that was a rough month. 2017, 2018, 2019 have had good runs coming in for the Nifty. Up until last year, at least 2023, the Nifty gained 8% in trade. And of course, 2022 was not so great. But if you look at it at an average, December usually turns out to be pretty solid for Indian equity markets. And in the past, we've actually outperformed Wall Street. Now, of course, it's never been a Trump setup in many ways, but it looks like it could be a good month coming ahead for all of us.
Yeah, I mean, the positive to negative ratio is 3:1 in favor of the bulls. So if we indeed manage to do that, then it's actually something that the bulls should take heart from. The only question is, will history kind of favor the bulls after what's been slightly sluggish October and November? I think a lot of people might count on that. Maybe the FI outflows stop, and that also helps the sentiment.
That definitely has slowed down in the month behind us. And also when we looked at the ratios and the rollover positions, there is some hope that the selling is now beginning to show signs of easing off. So while the bears were, of course, aggressive in building our short positions, The hope that this is going to abate as soon as December or somewhere mid-December is what the bulls will be optimistic of. Let's quickly take you through how the first day of the December series played out on Friday. It began on a positive note. The Nifty gained about 1%. November for the Nifty ended flat, so it was extremely volatile, very sharp moves, but we finally went home in the November series on a pretty flat note. Broader markets underperformed the benchmark on Friday. Pharma came back and managed to gain 2.3%, followed by auto, energy and infra stocks. Stocks like Cipla, Sun Pharma, Divi's Lab, which have had a very benign November, actually pulled back quite well on the very first day of the December series, turning out to be the top gainers on the Nifty 50. Bharti and Allied Distilleries, both of them had a strong run, up 5 to 6% each, largely on back of ICICI's upgrade coming in on both those counters. Adani Green, now what a welcome as it debuts on the F&O trading series. Adani Energy gained 22%, and this comes in after it had gained 10% on Wednesday and Thursday each. So it's been a very, very strong run on Adani Green. Adani Total and Adani Energy were also up 6 to 8% on back of F&O inclusion. GDP numbers came in below expectation at 5.4% versus 6.3%. But from what traders believe, Nifty has made an interim bottom at 23,900 with an immediate hurdle of 24,350 that they will attempt to take out over the course of the next few days. 24,000 puts have closed with the highest OI, and 24,500 calls have closed with the highest OI, indicating that that becomes your trading range for the next couple of days at least. The VIX has eased off quite sharply. That could be another cue for the bulls on the street. Sub 15 is always where that number looks healthy. We've come down all the way from 20 in November to under 15 as we start off the month of December. So all in all, it's looking good, or looked good on Friday. This morning, the cues coming in are also relatively positive. It's going to be a busy week, and this is what you want to keep in mind. You've got the RBI policy meet on 4th to 6th December. There is no expectation of a rate cut, but there is some parts of the industry do believe that the governor may look back at growth targets for FY25 and revise them downward. In terms of data, auto sales has been a mixed bag so far, and you've got also cement sales that will trickle in for the week. In terms of domestic data, you've got manufacturing PMI, which will be released later today. You've got services PMI and foreign exchange that will come in over the course of the next few days. IPO market will be quiet. You've got one IPO that opens today, which is a property shared investment trust REIT. It's a smallish 350 crore IPO, and you've got one listing towards the end of the week, which is Suraksha Diagnostics. On the global front, you've got manufacturing data coming in from a whole host of countries across Asia and the US, and geopolitical tension, particularly Russia-Ukraine situation, will be watched out very closely, like Neeraj had also mentioned. Crude, of course, you've got supply cuts coming in from OPEC, but the fact that the stress on the Asian part of the tension is easing off is what's leading to crude coming under pressure. So all in all, that's what I have, Neeraj. It's a busy week ahead, lots of local and global data that we may potentially react to.
Yep, most certainly. But for today's trade, on the trade setup, and what is it looking like? I think the GDP number, and yes, lowest in the 7th quarter, so I somehow feel it may not have a long-lasting impact on the markets for the week. So sure enough, in fact, the implied open suggesting they will start off in the green. We may have a short-lasting impact, sure, but on a slightly long, I mean, if we believe that this will have a big medium-term impact on markets, I really doubt that will happen. The clamor for rate cuts may start for sure, but because people will believe that the RBI needs to now act to shore up growth, but somehow we are unlikely to see any December action, maybe on the CRR, but not necessarily on the rate side at all. And auto sales have been mixed, but the sense is that the EV sales are turning slightly better, and you might want to look at some of the auto names, which we'll talk about in just moments from now. Just want to remind a few people about what the global opinion is, and one of the really good notes that comes out every fortnight is the CLSA bits and pieces note, and in that note, Alex Oldfield, who's the regional salesperson of CLSA, has been quoted as saying that the India Forum, which is their CLSA investor conference, was a timely reminder of the long-term structural growth story of India, underwritten by stable policy and a stable currency. He's been quoted as saying that it should not be long before foreign funds switch around and we reach a turning point. maybe December is the month. But, well, that's the short, medium, and the long term, if you will. What about today's trade, Samina? What are the stocks on your radar?
Quite a few, actually. Apart from auto, that will become an important sort of block that traders will look at playing. I've got a few more that are beyond the auto pack. Of course, Puneet will do a complete breakdown of what those auto stocks are. But it's also the season of order wins, and we've seen historically that every time companies bag big orders, the counters usually react positively to that news flow. So keeping that in mind, I've picked up RVNL. They've emerged as the lowest bidder for PSCL for infra projects worth 643 crores in Punjab. So big positive on RVNL. They had managed to swing significant orders last week as well, because of which the stock in the early part of last week had done quite well. KEC International, this keeps going back in the news. Again, a big order there, 1,040 crore order in its transmission and distribution business in the international market. Year to date, KEC International's orders stand at 17,300 crores. So again, a big significant one coming in for KEC International. Cochin Shipyard, I'll highlight that too. They've signed a contract for 1,000 crores with Ministry of Defence. So this one too could be reacting to that contract being signed with the Defence Ministry. Two auto counters that I've highlighted. I've not picked up the EV ones, but Maruti and TVS. Remember, the auto numbers are a mixed bag, but Maruti has clocked in double-digit sales, 10% higher at 1.81 lakh. And TVS Motors also sees a total sales number which is 10% higher at 4 lakh versus 3.6 year on year. So both those, I think, were a standout in terms of reporting. A bunch of the other ones, Neeraj, that didn't look all that great, to be honest.
Yeah, no, a few thumbs up though, but it was interesting, Samina, that you pointed out Maruti and TVS amongst others, because the City Note on auto says the same thing, that they've analyzed September to November, and in that the auto two-wheeler OEMs and Maruti 1% uptick, and the auto two-wheeler OEMs mid to high double-digit growth essentially are the ones that have done well. Yeah, so it's very interesting. Today, those two could be the stocks that could stand out. Now, my three stocks, Cipla. Now, it could go either ways, by the way. I've given it the thumbs up because it seems to be a clean out trade. The promoter looks to raise about 2,000 crores through the share sales. It's about 1.4 crore shares that will come in on offer today at a price of 1,442, which is lower than the current market price of 1,533. So you'd probably expect the stock to start off with a bit of a gap down. The question is, can it recover post that? I think that is the key thing. And it very well could, because this seems to be a clean out trade. So do watch out for Cipla. It may start off lower, but it may actually do well during the course of the day after that price. So bear that in mind. I think RBL Bank will probably see a bit of a stick. So RBL Bank and Bajaj Finance have mutually agreed to stop the issue of new co-branded cards. Now, while this is about a 1% EPS impact for Bajaj Finance, for RBL Bank, the impact is likely to be more. In fact, Morgan Stanley believes it's a reasonable negative for RBL, because they believe that it will hamper RBL Bank's ability to go out and penetrate the credit card segment deeper. So therefore, do watch out for RBL, could well see a bit of a negative in the session today. Dixon Technologies is the third one. A clear thumbs up, because they have entered into a contract manufacturing agreement with Compal for manufacturing of Google Pixel smartphones. Now, this is a big one. It is a higher quality phone that Dixon has been manufacturing thus far. And Nomura believes that this is a sign of the China plus one impact of Google moving some of the production away from China, and Dixon could be a long-term beneficiary of this. And therefore, you might well see Dixon Technologies react positively in the session today, despite the fact that in the last 1 month, it's gained about 12%. So these are the top three on my radar.
You know, Neeraj, on Dixon, right? I met somebody recently, and he was on the deal side before Dixon listed on the exchanges. And he said there were institutions that were unwilling to pick this up at 650 crores of market cap. And you look at it, 8 years out,
Yeah,
it's a
crazy.
story in itself, right?
It's a
Who
story
would have
in
thought? I think Amber, of course, did have some interest, a lot more interest than Dixon had picked up. But both those counters in the last 7 to 8 years have created history in more ways than one.
Yeah, it's a setup. Now there are 10 or 11 companies in this EMS space, which is quite staggering, really. But just one very quick one before we get to GDP and maybe some of the stocks that you may have, Samina. But Aster DM Healthcare, it's a big deal. We are going to be talking to the management conversation as well, showing that. But it's a large hospital deal in India. I mean, Aster DM and Quality Care, which is Blackstone and TPG backed, merged through a share swap agreement. Aster shareholders hold about 57.3% in the merged entity. The reason why people say it's a positive, Aster valuations are not cheap. They've done a share swap with a company which didn't have a great 2023, but picking up in 2024. It helps geographical expansion for Aster as well as specialty expansion, because Aster is great in oncology and Care is great in cardiovascular.
Both of the big problems of the nation.
Exactly right. So therefore, while Aster has had a bit of a run and it's expensive, it might well see a bit of a positive in the session today. So watch out for Aster.
Just simplify this. For Aster shareholders, is this a good thing or a bad thing?
No, so apparent people believe it's a great thing because it's a large chain getting merged into Aster. Aster trades at premium multiples and they've done a share swap. So they've used the stock price as equity as opposed to giving cash. They're sitting on 3,000 crores of cash, but they've used a share swap.
As opposed to using up the cash. In order to
and therefore it could be a positive for Aster.
So Aster becomes a positive. One quick one, Home First Finance Company, the promoters there are looking to do a pretty significant stake sale of 14.7% in Home First via a block deal. The size of the block deal is 1,267 crores. Now, maybe the market had a whiff of this on Friday, and that's where the stock sold off quite sharply. But this comes in at a pretty significant discount, 968 rupees per share. So you want to watch out for that too. Talking about pharma, hospitality, Biocon becomes an important one this morning. They've managed to get an approval from the US FDA for its Intech, which is a biosimilar to the reference product Stelara. So watch out for Biocon. Just treat it as a US FDA approval on a significant product, the name of which I cannot pronounce, but the stock becomes important to watch for. So I think a bunch of solid stocks where we will see a positive reaction. Qs are positive. Generally speaking, this Monday looks a lot more pleasant than what we've seen in the last 7-8 weeks.
Yeah, hopefully a rub of green on the screen. In fact, one more name could well be Adani Ports as well. I think the Nuava note out there is positive. They've spoken about a lot of reasons why the outlook on Adani Ports could be positive. They've in their investor day, they've reiterated the guidance Adani Ports has of 1 billion tons handling volume handling by 2030, and logistics business expected to be the key growth driver for Adani Ports going ahead. A clutch of other reasons, which is why their target prices continue to stay higher. Revenue 20%, EBITDA 18% CAGR, but for 24 to 29, 46% revenue and EBITDA up by about 48%. So multiple reasons why this could happen. In fact, their target price, as I said, 1960, which is about a 63% upside to the current market price. In fact, speaking of Adani, and standard disclaimers, of course, the Adani Group owns NDTV and you're watching NDTV Profit, but Gautam Adani was speaking at a summit, the Gems and Jewelry Summit, and he's spoken about, amongst other things, the recent developments, saying that we will rise again stronger and more resilient than before. And that's the word coming in from Gautam Adani post the group stocks making a roaring comeback last week. Listen in.
While we have had our successes, our challenges have been even bigger. However, these challenges have not broken us. Instead, they have defined us. They have made us tougher and give us the unshakable belief that after every fall, we will rise again, stronger and more resilient than before.
Well, that's Mr. Adani, of course, talking about why he believes that they're going to make a comeback stronger than before. Well, moving the focus to the macros, which was a shocker in terms of the GDP reading that came in at 5.4% versus a 6.3% expectation. Indraneel Pan, Chief Economist at Yes Bank, joins in. Indraneel, hi, it's Amina joining in. Let's start with what have you made of the sharp decline in the GDP number? Are these trends cyclical in nature or an indication of a deeper structural issue? And also, what do you expect in terms of the RBI's reaction to this? Still a rate cut expected only in Feb, or the odds have increased now of a cut in the next week?
Hi, good morning. I think, yes, the GDP was a bit of a shocker for all of us. In fact, our estimate was one of the lowest in the market at 6% GDP growth, and the GDP numbers have even been lower than the 6% at 5.4%. So if I were to call out two things, on the production side, the manufacturing sector seems to be doing quite badly in this period and is indicative by the fall in the profitability of the companies. But more important for me to call out is the personal consumption expenditure, which was much lower than the expected growth. Now, there could be a couple of reasons for that. One is the Pitru Paksh, which led to a decline in the demand. The other is, of course, the significant amount of heavy rainfalls across the country in August and September that could have sort of derailed the consumption pattern. But however, having said that, there are both cyclical and structural elements in this growth pattern. Cyclical, as I said, the festive demand and the Pitru Paksh and the fall in the demand on that. So from that perspective, we see some amount of uptick happening in October already, which was the festival month. And most of the advanced indicators that we see are positive during that month. On the other hand, from the structural perspective, I think wage growth or the real wage growth in both the urban and the rural sectors have been on the lower side. And that is likely to be sort of pulling down demand to a certain extent. Apart from the fact that the RBI has been consistently sort of trying to bring down the CD ratio and had been pulling down the unsecured loan growth because they had increased the risk weightages on these some types of the unsecured loans, and that is also likely to have a negative implication on the demand side story. In terms of the RBI, I think we were talking about a 50-50 chance in February. The probability of the cut in February has increased. We don't see anything in December because in December, the RBI is working with a 6.21% of a headline CPI inflation as of the last reading. And this possibly does not make the right instance where they can actually reduce the rates.
I just have one more question. While you don't anticipate an action in December, could there be a CRR cut in order to manage upcoming tight liquidity? Do you anticipate that?
So first of all, I think the Q4 anyways is relatively tight on the liquidity side. What has made the situation slightly tricky for the RBI is the very fact that we have global risks playing through, which has led to a significant amount of FX sales from the RBI. Our estimate is about a $20 billion sale from the peak level, which is tightening the liquidity to a certain extent. Now, I don't think CRR is the right tool because it provides a durability in terms of the liquidity infusion. And most of the central banks, including the Reserve Bank of India, had been trying to move out of the balance sheet expansion during the COVID period. And the Reserve Bank of India has actually managed to bring down the reserve money growth and the money supply growth to that extent. And therefore, it will be counter to these actions. First of all, the RBI obviously will try to manage the liquidity situation through the VRR and the VRRR and adjust the liquidity at the margin. And if there is a significant stress that continues, rather than a CRR, I would actually sort of want to see the RBI move on the open market operations, open OMO sales to contain the liquidity pressure. Open OMO purchases to continue to address the liquidity pressures in the market.
Okay. Indranil, thank you so much. It's interesting. I'll keep an eye out for the CRR action or lack of it thereof, because you are one of the rare ones who is saying no action. So we'll watch out for that. But thank you so much for joining in today and giving us that view.
Thank you.
Right, that's the view from Indranil Pan of yes. He doesn't expect too much of CRR action either. Now, a big transaction that got announced over the weekend was the merger of Aster DM with Quality Care, which is another hospital chain. It becomes I think the third largest chain now as a result of this. And, the idea of getting in Alisha Moopen, who's the deputy managing director of Aster DM, is to try and understand the rationale behind this merger. They have done a share swap as opposed to other things. And Alisha, thanks so much for joining in. Let me start by asking why this transaction? Is this the lay of the land, inorganic growth versus growing organically?
Super excited. It is, you're right, it's been a major milestone for us, and we believe it's not just a major milestone for us at Aster, but we truly believe it's going to be a transformative merger for healthcare in India. It is one of the biggest transactions that has happened even globally. When you ask the rationale behind the merger, I think I'll have to rewind back a little bit, because last year we're sitting with a demerger of the GCC business from Aster India. And then we realized that we definitely want to scale up India. The whole idea of the demerger was, how do we double down our efforts on India? How do we build on our strengths in India? And how do we scale up India? And there are a few ways to do it, right? We can either go ahead and start organically building that out. And the goal has always been, how do we become the top 3 and then eventually the top healthcare provider and platform in India? So we went through this whole process of evaluation, saying that should we do it by ourselves? Should we do it with a PE sponsor? Should we do it with someone with a platform? And honestly, we believe that it's destiny. We're very lucky and very excited to partner with Blackstone with their platform of Quality Care, because we truly believe it's very complementary for us, right? When you look at the size and you look at the scale, we're so similar. Together, we are now creating an entity with 10,150 beds, which takes us to being the top 3 in the country. We will be in 9 states. We had a dominant South Indian presence, whereas now we'll have access to a lot of Central Indian markets. We add 4 new states. We will have 28 state leadership. So when we started looking at this on paper, we said, this is perfect. This is exactly what we want to do. And instead of doing it in 3 years' time or 10 years' time, why not do it now with a great partner like Blackstone, who can help accelerate this for us and really take our goals and our dreams to build the finest world-class healthcare institution in India and make that a reality quickly.
Alisha, what happens to the number of beds and the expansion? Because, I mean, you moved to 10,000 as a result of this, but from here you're only targeting 3,000 beds. So are you going a bit slow?
So 10,000 beds, we always had given guidance around 20% growth year on year. We've probably done more than that in the last few years, and our growth has been quite significant. But when you have a 10,000 bed base, adding 3,000 beds, which is 30% additional capacity, and large part of it being brownfield addition, that's not muted, is it? That's 30% growth. And the ability to ramp up and accelerate that, it's very fast for us, because these are, like I told you, a large part of these are brownfield units as well. On top of it, Neeraj, I mean, like, we do want to spend time to integrate these 2 platforms, right? They're large, they're mammoth in size. We want to make sure we're able to leverage the benefit of this scale. So that would mean a lot of effort will go into definitely unlocking that and gaining that value out of the system, whether it's on cost synergies, whether it's on revenue synergy, whether it's on manpower. How do we share the best practices, the best doctors, the best teams across to make sure that we have the best protocols in place? Having said that, look at the balance sheets, right? We do have very low leverage. We have cash available. We can go ahead and do inorganic expansions beyond what is there. So we're not putting that off the table. The appetite and ambition is high, but we also want to do justice to it, right? You don't want to scale up too fast where you're not able to do justice to this platform and the merger that we've created. So we said we will do we'll start with the merger process, we'll start with the integration process, and of course, we want to very, very diligently evaluate the opportunities that come up. The goal, again, is to be a pan-India player, and that really depends on what comes up in terms of options and opportunities, and we will be opportunistic in that aspect.
Got it. Alisha, now you got a bit of a stranglehold on South, right, by virtue of this. Would you look to expand beyond South in this combined entity? And would you expand beyond oncology and cardiology, which is the combined expertise of both of these entities? Sorry, I can't hear you.
So, current states that we will exist as a merged entity, like I said, the 27 cities and the 9 states, we definitely want to build further market leadership. And to the point, I think what's more pressing is the point you mentioned later, right? It's not only about adding beds, but how do you change the profile of the work that you're doing. So definitely there is a lot of leadership that we have in a few centers of excellence, whether it's neurosciences, whether it's oncology, whether it's organ transplant. And as you called out, CARE is well known for their cardiac program. So we do believe there is a lot of clinical knowledge sharing that will happen. And we want to be able to kind of do that with the existing facilities, especially with the brownfield. On the geos itself, but we are actively looking at the pipeline of assets, and they do range across the country, and we've found some interesting assets, but it would be too early and too premature for me to talk about. And it's so hard to give you a vision on that because it really depends on what's out there and what materializes at the end of the day. So we do want to also put our heads down and focus on the big opportunities that is there at hand, but also tell you that we are keeping our ears to the ground on if there is something that's attractive that comes, we will not shy away.
Alisha, we'll have to thank you though. Time is just over, but congratulations on this deal and all the best for the quarters ahead. That's Alisha Moopen of Aster DM. Remember, as we said, it creates one of the largest hospital chains in the country, amongst the top 3, certainly one of the largest ones in South India for sure. And you might expect the stock to react a bit positively today. We need to slip into a quick break though. We haven't taken one for a while. On the other side, we'll try and focus on today's trade squarely, what to buy, what to sell, what to hold. Stay tuned.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories
sort of levers of growth. One is that it is operating in a very, very large 120 million case segment. So every 2% market share shift actually translates to significant volume. And I think being a younger brand, it is likely to get a slightly higher share of the new startup. So we stay sort of optimistic on the growth of the brand for the next few years. So Andhra is just about Andhra as a state has just about got at it because Andhra was not we didn't have the approvals in Andhra. Andhra billing starts only in December. Delhi billing starts only in December. So there are 2 new markets, and I think you spoke earlier about export. We're also seeing a growing footprint for Iconic in the international markets.
So, Mr. Gupta, I heard you say that the volume growth, correct me if I'm wrong, but volume growth 40% from the premium segment and 50% value growth, if I'm not wrong. But I would love to know what is the kind of overall volume or value growth consolidated that you envisage for the second half? Because for you, the story in the first half has been about this IPO, interest cost reduction, uptick in PAT, and yes, doubling of margins from 6 quarters ago. So that's phenomenal. What about top line, sir? How does that behave or in H2 versus what you did in H1, say? Or FY25 or FY24?
Yeah, I think I'll just add one more KPI to what you've just said. I think you will see a significant change in our gross margin. Till last year, we were operating at about 37%. Q2, we are at about a 43% gross margin. So there's about a 600 basis point expansion in the gross margin that has come on back of focusing on profitable market. As far as the volume growth guidance is concerned, we are looking at early double-digit volume growth, H2 and going forward.
Okay, I have a small technicality question, and that is on the Telangana receivable, right? If I'm not wrong, the amount due is about 350 crores. Now, what's the status there? I mean, almost everybody wants to know, does that come? When does that come? Are you setting up some timelines for the same?
We had a meeting at an industry level along with the Chief Minister, the Excise Minister, and the Principal Secretary. That was the month of July. So I can only confirm that the program that was promised to the industry has indeed been put into place. And I think the entire industry, and including us, for the last 45 days, 6 to 8 weeks, have been getting the receivables on time. So I think over the next 2 quarters, we should see significant improvement in the receivable from Telangana. I think we are out from an uncertain zone to a certain zone.
Just to clarify this, Mr. Gupta, so this, I mean, does this take into account the 350 crores of outstanding receivable as well over the next couple of quarters, or is it difficult to say?
My sense is from what we've seen in the last 6 to 8 quarters, over the next 2 quarters, we will see significant reduction in the overdues for the industry and including ourselves.
Mr. Gupta, you know, a lot of your plans are dependent on the P&A segment growing, or is very P&A segment becomes very critical to your growth strategy, right? Are there any operational challenges that you face so far? Anything that could potentially derail these very ambitious plans that you know you're setting out for Allied? And the reason we ask you this as well, because the going is good, it would also be good to know what risks stand.
Well, I think let's just divide this into 3 parts. First is from a demand servicing standpoint. I think we have a sufficient capacity to service demand. We always keep our network at least 25-30% more than what the demand outlook is. So from a demand servicing point of view, we do not see any significant risk. We do not see any significant risk in terms of raw material or supply chain security. So far on the margin front, the commodity cycles have been favorable to neutral. So from a margin front, there could be some risk if the commodity cycles were to turn unfavorable, but so far the outlook is pretty neutral. So I do not see any significant risk on the margin front. I think key thing is going to be to continuously push growth in profitable volume and make sure that we are growing with the focus on gross margin and not sort of chase volumes where margins are not coming. So from a demand servicing point of view, supply chain point of view, I think we are well covered.
You've got very ambitious expansion plans as well, about 525 crores over the next couple of years. Now, how are we going to fund this expansion plan, and what is this backward integration going to do for you? Because I'm assuming some sort of cost efficiencies will come into play, but how will that play out? Because I'm assuming cost of funding will see an impact in the first 1 to 2 years, but the same to ensure operational efficiency is still 2 to 3 years out.
Right. So I think we've been fairly careful in terms of the projects that we've picked up. We have picked up projects that are largely around supply chain security and around which impact our gross margin. So currently, for every 100 liters of ENA that we consume, we roughly make 1/3 and buy 2/3. The project that we have announced is to take our capacity from 1/3 to about 70%. We also announced a project to establish India's first single malt distillery. Again, from a make or buy perspective, we make 0 and buy 100%. That gives us 100% security on our malt. And the third project that we've announced is PET for the state of Telangana, which will produce about roughly 600 million bottles, which will essentially get consumed within the state of Telangana.
Look, how will you be looking to fund this?
Well, the investment of 527 crores is required over a period of 3 years, of which only 180 crores is required in year 1, 220 in year 3, and balance in
50 crores right now. How will you fund it? Is it going to be through debt or internal accruals? The reason I ask is because
internal accrual and partially through debt.
So some part of the interest cost will go up again then?
Yes, some part of interest cost will indeed go up.
Okay. I have one final question, Mr. Gupta, and that is on the slightly medium-term trajectory. Almost everybody pencils in that with with Andhra Pradesh doing what it has done, or Andhra Pradesh, Telangana, the volume growth of about 12 to 13% for companies which have some exposure to that state, you being one of them, looks to be a given for the next 2-3 years. My question to you largely is though, is that the nature of the game? 12-13% volume growth for the next 3-5 years, or do you believe global businesses plus maybe other states plus deeper penetration can improve the volume growth? I'm not saying 12-13% is a bad number. I'm just asking whether that is indeed what you believe in, or do you believe that it is different?
So first, your point to Andhra, we did 1.8 million cases last year. We should close at about 3 million cases this year. So for us, Andhra is not a 12% growth market. It's a significant growth market. On your point on overall growth, we have to recognize the fact that we have Officer's Choice, which is a very, very important brand for us, which is about 20 million cases. There we see the growth to be high single digit. And in the P&A segment, which is Iconic, Sterling Reserve, and OC Blue, we see the growth to be double digit. So the blended growth is early double digit. We have to keep in mind that Officer's Choice, being a large brand, will only grow single digit. So it's a blended growth for the portfolio.
Okay, but sorry. So then, therefore, I'm still coming to my question: is about 11-12% growth a number that you work with for the slightly medium term, let's say 2 to 3 years or 3 to 5 years, or can that number be different because of global exposure, etc.?
I think with the changing the policy that is changing in Andhra, I would say a 12% plus growth number would be a fair number to assume.
And this includes even the tailwinds that come in from the global exposure that a lot of Indian liquor is getting.
Absolutely.
Okay. Great. I'm presuming by what you answered to Samina around how you will fund the capex, which is internal accruals and debt, you do not look at any equity fundraise in the next 6 to 12 months.
We don't envisage any equity raise in the next 6 to 12 months. That is indeed correct.
Okay.
So Gupta, just very quickly, you've talked about your margins already, but your margins are fairly healthy at 12%. But you do have a goal of 15-16% in the next 2 to 3 years. Realistic goals, is there any risk of outdoing that margin of 15-16%? Upside risk there?
So the projects that we've announced in ENA and malt space and PET space should have about a 300 basis point impact on the overall EBITDA. So along with the current margin of 12 and 300 basis point margin coming from the capex investment should get us into a 15% zone, and we expect a further bump up on back of the portfolio that is undergoing a change. So we put ourselves at industry parity EBITDA at 15% plus over the next 2 to 3 years, and that really is the big goal that we are chasing.
One last question, Alok, and I know we are getting a little greedy, but you've had Zoya, you've had Iconic, you obviously have Officer's Whiskey, but you've always talked about increasing your offering to increase your market share. Tell me what market share is at right now, and if there are any new products that are in the offing that we can expect as early as this quarter or next quarter.
So we're currently at about 8% overall market share of the industry, right? The industry is about 400 odd million cases. We do north of 35 million cases this year. We've launched from a new product point of view, our focus is largely in what we call as the luxury segment. So apart from Zoya, we have launched Art House blended malt scotch, which is now available in state of Maharashtra, available in Haryana, available in Punjab, and getting rolled out into a couple of other markets. And we've also announced launch of Russian Standard Vodka, which should hopefully be in the market in Q4 of this financial year. And we should see at least 2 to 3 more new launches in the luxury segment over the next 3 to 4 quarters. So the luxury segment is where really the big focus is in terms of new brand. We should see the current number of brand in that portfolio from 3 going to at least 6.
Very, very exciting, Mr. Gupta. Good luck. The company, of course, has been having a roaring time in the markets. It had a stellar performance on Friday. This morning, too, trading with the positive buys. Good luck, and we'll hopefully see you soon.
Thank you so much for your time.
Well, that is the management of Allied Blenders and Distillers. It's been a stellar performance. We had an upgrade coming from ICICI Securities as well on Friday, upgrading the counter quite aggressively. The plans are ambitious. Mr. Gupta talking about how well Iconic White Whisky is doing. Along with that, telling us the rollout of Zoya Pan India. All that put together indicates that they're growing at a CAGR of over 10% over the next 2 to 3 years, with margins moving towards 15 to 16% over the next couple of years. Finance costs has come down, but there could be an increase in finance costs in the next quarter as they look and undertake aggressive expansion plans to the tune of 525 crores. In the meantime, a quick check on the markets before we slip into a break. It's not a great day for the street. It's a flat day, but like we had said, the markets would recover, and they already have. You didn't even have to wait till the second half of the day. The little bit of gap down that we saw in the early minutes of trade has gotten bought into, and the Nifty now at 24,120 at the day's high point. We'll take a break. We'll come back and, of course, continue talking markets, so stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The news.
Hi, thanks so much for joining in. Happy Monday to you. My name is Alex Matthew. With me is Mahima Vajrajani, and the two of us will take you through the next 1 hour of trade. The show is called Ask Profit, and as the name suggests, it gets you answers to all of your stock-related questions. And there are a variety of ways that you can get in touch with Mahima and myself. One of them, of course, is the call. You can just pick up your phone and you can dial the number that you see on your screen, and we'll try and take your call. Not promising it. We will take as many as we possibly can. You can also send us a message on WhatsApp, and we'll definitely try and take as many questions on that route as well. Mahima, how's the weekend?
Oh, the weekend was tiring, as well as a lot of shopping because Black Friday sale was on. So yeah, that was it about my weekend.
Fantastic. All right. So
Yeah.
I had a fun weekend as well. Let us know what you think about your weekend and how you think trade is looking at the start of the new week. It is chop and churn right at the start, but we are trading in positive territory for the Nifty 50, and it's been a very narrow range once again. 170 points, 175 odd points for the Nifty 50. Overall, the market breadth in favor of the advances as we speak right now, because the broader markets are looking reasonably good. I think it's more or less flat for the mid-cap index, but the small-cap index up about 0.4% or thereabouts, and that's why you're seeing gains. The IT stocks are holding off the falls that you're seeing in certain other pockets. The Nifty Bank is underperforming, down about 0.4% or so, but the IT pack is up about that same level. And among the other movers, you have the likes of Realty, which is doing quite well, up about 1.7%. Pharma, that's up about 1% or so. Media is up about 0.7%. But among the losers, like I mentioned, you have the banking pack and the PSU banking pack also that are under a little bit of pressure. Any individual stocks that you're looking at that stand out today?
Absolutely. Let's pull up Aster DM and see what it's doing in trade today. The stock did see a good uptick after its con call and a lot of positive commentary coming in. Yes, the stock is up around 3%. Adani Green also is doing very well in trade today, up around 7%. Let's also pull up Cipla and see what it's doing in trade today. And something like Dixon that has entered into a manufacturing agreement. Dixon is also doing well in trade today, up up around 5%. So these are some of the outliers in trade today. But Is My Trip did see a lot of gains on Friday, but now it's seeing certain profit booking. It's down around 5%, I believe. If we can pull up Is My Trip and see, that counter is under pressure, and there's some profit booking seen in Is My Trip as well. But Alex, we have Osho Krishnan who's joining us.
In fact, we have both our experts joining us. We've got Osho Krishnan as well as Saurabh Jain joining us this morning. Thanks so much, gentlemen, for taking the time, and welcome to Ask Profit. I'll jump straight into the questions that we have. And the first one is for you, Osho, and coming in from Shyam Babu, who's asking about JSW Energy. I do not know what level he has bought at, but he's holding right now, and he's asking what the near-term trends are for the stock. Would you hold or sell at this juncture?
Very good morning, Alex and Mahima. Firstly, thank you for having me at the show. Well, now coming to the query on JSW Energy, then this counter has been one of the outperformer in the recent period. Overall, it is into a consolidation zone. We can also say that it is into a time-wise corrective phase for the time being. But overall, the technical structure is still on the higher end. So I'm expecting that from here onwards, it is at the lower band of its consolidation. Approximately 640.45 is a very strong support for this counter. So I expect that from here onwards, it can see some kind of cushioning and can witness a pullback in the coming period. On the higher end, 720 and 750 is the immediate resistance or can be seen as a target for short-term trader. But the time it breaches the zone of 750, then from there onwards, we can see a decent movement of approximately 100 points on the higher end. So definitely one should definitely hold their investment in this counter from short to medium-term time frame.
Okay. All right. The next question that's coming in is from Madhusudan, who's writing in from Bengaluru, and he's asking about Adani Green. The stock is gaining in trade today. Several statements made by the group. Of course, it's given up a little bit of ground, but it has recovered all of the losses that it incurred over the past couple of weeks. So on the fundamentals, what he's asking is whether it can be bought right now and at least held till the next general elections.
Hi, good morning, Alex. Thank you for having me on the show. See, particularly from the valuation point of view, I find Adani Green very expensive. It is quoting approximately 190 times to its trailing earnings and more than 20 times to book value. So from that perspective, I feel that a lot of growth is already being factored in the prices. So in that sense, I would say avoid Adani Green.
Standard disclaimer, of course, this is Adani Green that we just spoke about. NDTV Profit is part of the NDTV group, which is owned by the Adani Group.
All right. The next question is from Rajeshri, who's from Ahmedabad. She's holding 500 shares of L&T Finance, and she's bought it at 145 a piece, and she wants to know whether she should keep holding it, sell it, or add more. Saurabh, I'll come to you for this one. Your outlook on the particular counter, L&T Finance?
The numbers posted by the company was okay. I mean, on the valuation side, it is quite comforting. I mean, it's quoting below book value, I guess. So I think the sector looks good, and so the company, my take would be hold on to it.
We've got, so Rajshri is just, hopefully that answers your question, Rajshri. We're taking the next one from Shrikant, who's writing in from Telangana. Okay, and the question that he's asking is about Gala Precision. Let's pull up the stock and see where it's currently trading. He has bought, but he has not told us the buy price. The stock is currently trading just above 1,000. Would you hold or sell? What's the view on the charts, Osho?
See, overall, this counter is recently listed, so there is not a very strong technical data for this counter, but I expect that overall with the kind of a higher movement that we have seen from the zone of nearly 800 towards 1300 odd levels, the counter have seen a decent correction from the higher end. Still looking at the overall short-term trend, there can be some room for further correction near the zone of 950 to 920. So one should wait for further correction towards 920, and that can be a level where one can try to accumulate this counter in the coming period.
All right, I believe we've got our first caller of the day. Chakrapani is calling us from Bengaluru. Good morning, Chakrapani. How can I help you today?
Yeah, good morning, sir. I am holding Dilip Buildcon Limited, DBL. Okay, around 2,000 quantity I have. I have averaged for a period of 3 months. My average rate is around 499. Normally, I used to book profit quite often around 550, 580, like that.
Yeah.
But this time I got stuck at 499. So what should I do? Should I hold, book profit after 50, 60 rupees?
Yeah, I just want to confirm, Chakrapani, you bought this from the perspective of a trading strategy, right?
Trading, yeah.
Okay.
I've been watching this stock for last 3 years.
3 years, okay. And intermittently you're saying that you bought and sold this stock and you generally
bought and sold and yeah.
Okay, so you're losing a little bit of ground right now. 485 is the current price. Let's get across to Osho and kind of get you a view on the strategy that you should employ. Average price of 499, Osho, we're talking about DBL here, Dilip Buildcon, 485 is the current price. What is the strategy that you would employ here?
See, overall, as he has mentioned that the counter sees a resistance around the zone of 560, 580, and after that can see some kind of, or also see some kind of downside towards the zone of 460, 470. So it is at a very strong support zone. Last week, we have seen a very strong pullback in this counter, which has seen a decent spur towards the 200-day simple moving average. So in the coming period, definitely one can expect a decent target on the higher end. Immediately 520.25 can be seen in the coming period, and the time it breaches the zone of 525, then again 540.45 should be the target that one can eye for in the short term trend. So definitely from a trading perspective, one can stay hold to their position at 499, and on the lower end the strong support is placed around the zone of 460. So it is advisable to keep a stop of 460 for immediate target of 525 followed by 545.
Right. The next question is from Vijay, who's from Chennai. Now, he's a senior citizen and he's bought Bajaj Housing Finance 150 shares at 166 a piece, and he wants to sell now, and he wants to know a right exit level to do this, and his horizon is max 3 months time. So, Osho, I'll stick with you for this one. What, according to you, should be the right price he should exit at?
See, overall, Bajaj Housing is into a downtrend. There has been no decent respite or pullback that can be seen, but in the last few trading sessions the counter has emerged above the zone of 130 on a precise manner. So I expect that there can be a decent consolidation near the zone of 128 to 130 odd levels. If it sustains above the same levels, then we can see some further continuation of consolidation zone. But on the higher end, immediately it is very difficult to gauge any kind of momentum in this counter. So one should better try to either exit near the zone of 140 or can even wait for medium-term time frame as an short-term investor.
Okay, all right, got that. Mahesh from Vijayawada is joining us on the phone line. Mahesh, good morning. You want to know about Borosil Renewable, right? Have you already bought the stock? Mahesh, can you hear me?
What is the outlook of Borosil Renewable? Shall I buy at this rate or not?
Oh, shall you buy? Okay, so what is the kind of time horizon that you've got, Mahesh?
1 year.
1 year. So it's a trading strategy that you're looking for. But I'll still go across to Saurabh on the fundamentals, because this is a counter that's quite interesting. The business outlook should be something that you should watch as well. So from that perspective, Saurabh, would you like to buy Borosil for a period of a year?
Management has already indicated that a lot of competition is there for the company's products. I mean, a lot of imports are coming into the India at a price near their cost of production. So if you look at the numbers of the operational metrics, also they are posting losses, and right, minor losses are there, but they are still to make. They're still some way finding difficult to sell the products at the optimum prices. So in that sense, on the valuation side, it is quoting at above 6 times to book value, and the bottom line is in red. So I would say better avoid it.
See, this is not a specific stock-related question. It is, but I don't expect you to have a view on this, Saurabh. We've got a viewer, Haresh Thakkar, who has bought Indo Solar, which he is experiencing a loss on, and he points out that the stock has since been delisted, and he's wondering how to kind of get his money out, whatever is left of it. Now, the reason I'm asking you about this is because a lot of people do enter these penny stocks, and often there are companies that get into NCLT, insolvency, and stocks get delisted. What is the process, if you can tell us in a short manner, that you can try and get your money? You generally get in touch with the company, right?
Yeah, I mean, you can get in touch with the company through their registrar and ask them what is happening in the company. Is the promoter, is the company is ready to buy the stocks lying with the shareholder because of the delisting? How the delisting, why the delisting was happened? I mean, it is because of the some negligence of the rules that is mandatory for every company by the exchanges or not. So you can ask the registrar, write a letter to them, and probably or call them. They'll probably respond.
Yeah.
All right. So I hope, Harish, your question has been answered. The next caller that we have is V. Ravichandran, who's from Chennai. Welcome to the show, and how can we help you, Ravichandran?
I have invested HP adhesives at 95 rupees.
Okay.
400 shares of HP adhesives. I want a fundamental view whether I can invest further for a long term. Long term means 3 to 5 years.
Okay, so what was your, rationale behind investing in this, first of all?
It's a newly listed company, and it is serving, it has a wide variety of products.
Okay.
So, which I feel, has growth potential.
Okay.
That was the logic behind.
All right. Saurav, I'll come to you. Your view on HP adhesive, if you have the coverage.
Actually, it is a very small company, less than 800 crore worth of market cap, not in coverage.
All right.
But okay, let me step in just to, okay, if you don't have specific coverage on the HP adhesives company, then what about the space? Because you're talking about industrial adhesives, am I right in that assessment? And if that is the case, what stock would you prefer in the investment horizon?
Look at the bellwether in the industry like Pidilite, and also struggling with the margins and the the volume. I mean, they are finding it is difficult for them to push the volumes. So I think if the bigger player is in the pain, smaller can anyone can expect how the smaller can behave. So in that sense, also it should be avoided.
All right. The next question is from Kishore, and he wants a take on Reliance. Should I hold, sell, or buy? And at what price it should be for the next 1 year? Osho, I'll come to you for this one. Your take on how Reliance Industries look on charts?
See, overall, Reliance is placed at a very lucrative level, I will be saying, because on technical front, we have seen a multi-week breakout around the zone of 1200, 1250 odd levels in the month of December last year, and again in this December 2024, the counter has hit the same levels. So it is the retesting of the breakout zone, the retesting of the neckline. So from here onwards, one can definitely expect a decent move in this counter. Again, being the largest cap company in India, so I expect that there will be a gradual up move, but on the higher end, immediately 1400, 1420 should be the target that one can eye for in the short term, followed by 1500 to 1580 kind of a zone that one can definitely see over a period of time.
So considerable upside seen in Reliance Industries, even in the short term. So keep that on your radar. We do want to interrupt the queries just for a short while because it's an interesting show. I'm very excited about it. It's going to be coming up for the first time today. It's at 11:30. The name of the show is Know Your Company. And to talk about it, I have the anchor of the show joining us in studio right now, Agam Vakil.
Yeah.
Agam, I'm really excited about this. I told you in the newsroom, but why don't you tell our viewers about what this is all about?
Right. So, Alex, any equity markets has a culture of this company looks good and that company looks bad, and ye achhi lagti hai and wo maza nahi hai. But our endeavor here is to actually take these companies up, which have been spoken about in social media or been discussed on the street in general, and to give you a slightly deeper analysis on the company. And along with that, we will take a street view. That is, we'll have an analyst to talk about that specific company, and we will have a management of the company. So we'll give you an overall, all-around perspective on what you could potentially do. So in fact, we're rating this company on its past performance. We're also giving an outlook, and not only are we talking about it with analysts, but we're also talking to the management about this.
So you would basically go into valuations, you would go into earnings picture, you would look at peer comparisons, the whole picture.
Yes, absolutely. And the other advantage here, as I see it as someone who would like to view this, is, just brushing up with your basics, because I'm going to be talking about the income statement, the balance sheet, the cash flows. I'm going to talk about return ratios. So I go down to the very basics, talk about that, take that up. Also, let's not forget, I'm going to be comparing that with the peers, that specific company with its peers and how that's been performing. So I'm going to try and do as much as possible to give you a really good picture of whether or not it should be an interesting, investment bet or no.
AstraZeneca is the first company we're taking.
Yes.
That is today. Agam, thanks so much for joining in and for giving us that sneak peek, that preview. I would encourage you to watch the program live at 11:30, because this is going to give you a perspective as to whether or not the stock that you've invested in should be held on to. I will say this, not every day that you look at the cash flow statement of a company, and this is something that is going to give you the absolute perspective that you need, beyond, of course, getting a fundamental view. So there are several questions that I have lined up in the meanwhile. Let's go across to our next caller. We've got Mohidil from Tamil Nadu, who is holding 500 shares of Equitas Small Finance Bank that he's bought at 82. Mohidil, thanks so much for calling us. Good morning to you.
Yeah, very good morning to you.
First of all, can you tell me, did you buy this for the short term or did you have a long-term fundamental view?
Actually, I'm a short-term trader.
Okay. So what was the thinking about this, and what are the kind of targets that you had in mind?
No, I bought it at the upper level because I bought it around 83, 84 and I brought it down to 74 now. It is almost 4 to 6 months over. I'm a bit worried.
You're a bit worried. Okay, how long can you hold on to this, Mohidil?
No, that at least I am looking for some decent profit level.
Got it, understood. Osho, I'll come to you on the technicals. So if I understand correctly, his average price has come down now to 74. He had gotten at elevated levels 82, 83. So therefore, would you suggest that he hold on to this, and what kind of strategy should he use?
See, overall, looking at the technical perspective of this counter, then it has been into a cycle of lower lows. So there has been a very strong corrective phase that is being seen in this counter. The only positive development that is being witnessed in this counter is that it is having a positive divergence on the technical indicators last week. That means the prices are coming on the lower front, but the technical indicators are showcasing a higher lows. That is a positive development for the counter. Also, if we will be looking at a broader term time frame, then approximately 58 to 60 is the zone from where it has started its higher journey in the past period. So I expect that in the coming period, I am not very much bullish in this counter, but overall, if the person is already having this position in this counter, so I would say to stay invested, 58 should be the stop loss that one could keep in this counter. On the higher end, not very much again aggressive, but that it is having a kind of a target or a resistance around the zone of 71 in the short term. And also, if it breaches the zone of 71, then we can see a decent pullback or respite from the falling zone in this counter. So after that, approximately 75 should be the next potential target where one should try to exit their position.
75 is the target given for Equitas Small Finance Bank. The next question is from Devi Prasad, who's from Bangalore. Now, his query is on Dreamfox. What he's done is he's averaged down since 2023 from 489 to 407. So he's bought it in staggered levels. And he's saying it's an unusual yet new business model. Can you get us some views on this particular script? Saurabh, I'll come to you for this one. Dreamfox is doing new things. Apart from managing the lounges at airports, it's now entering into catering at highways as well. So your fundamental views on this particular counter?
I think these are the businesses you need to spend some time. The idea is good. I mean, the valuations have corrected now because the stock has underperformed largely in the last 2-3 years. So in my sense, I think stick with it and wait for the earnings, wait for the December quarter earnings and the management guidance, and then take a decision.
All right. We have to slip into a very quick break. Do stay with us, Saurabh and Osho. And viewers, we'll be back on the other side to take more of your questions. So do stay tuned.
areas. Sure, if of course it is a pharmaceutical major, but it's also the Indian arm of global major AstraZeneca. Well, moving on, of course, established in India in 1979 and headquartered in Bengaluru, Karnataka. What it actually does is not only does it manufacture, but it also distributes the pharmaceutical companies which it produces. The company has about 800 odd employees in India. And to give you an idea about the overall revenue breakup, because that would give you a clear picture about how things are panning out here. Well, a majority of its revenues come from oncology, and that's cardiovascular, that's followed, and that's roughly about 85% of its revenues is followed by diabetes and respiratory. So you can clearly see that it is cancer drugs, and to a certain extent, cardiovascular drugs is what's driving the company. But we do need to take a look at how things are faring as far as this financial performance is concerned. And for that, I'm going to bring in my colleague Varsha Chandani to certainly very strong balance sheet, good cash reserves too. But what they are lacking in is dividend. And maybe I'll just give them a half a point and not completely take a point away, because as Varsha mentioned, that they are investing a lot in growth. But the minimal coverage on the stock could potentially be a little bit of a dampener here. With that, let's move on and talk about a handful of strengths and weaknesses. And that's where perhaps we can get a little bit more understanding on how the company is doing. So I'm going to start off by talking about the strengths and weaknesses. Let's start off with the strengths first up. And we do know that it's one of the leaders in cancer care. As I mentioned, about nearly two-thirds of its revenues coming in from oncology, and the balance coming in from, a lot of that coming in from cardiovascular. So it certainly is a big one in terms of strength. Even in terms of innovation, it does have an advantage that the fact that its parent is an American company, because that's where it does see a lot of transfer of technology towards the Indian unit. In terms of weakness, of course, we don't have too much in terms of diversification, but this is only for the lack of too many weaknesses. Sure, it does have a lot of focus in oncology and cardiovascular drugs, but that's not a terrible weakness. But what about opportunities and threats, Varsha?
Yes, so Agam, the main opportunity for this company is like in start, you mentioned that 62% of the business comes from oncology.
Right.
So now we know that the GST rates have been reduced for cancer products for 4 cancer products, which actually AstraZeneca makes or distributes from buying it from parents. So the GST there has reduced from 12% to 5%. The one big thing that AstraZeneca has. The number 2 is of course the rising penetration of health insurance that we are seeing. Again, a boost to AstraZeneca. Also, government has exempted 3 cancer drugs from custom duty. Again, those 3 cancer drugs are actually manufactured and sold by AstraZeneca India. So, and lastly, if you see the expansion of medical infrastructure that we are seeing will actually benefit all the pharmaceutical companies when it comes, including AstraZeneca. But I would also like to point out the threat that the company might have. One is the supply chain disruptions and the rising input costs may this is one of the threat that the company has. Then we all know the imminent threat of price reduction that all the pharmaceutical companies can see. And lastly, if you see the rising US tariffs may actually affect sales of the company, including AstraZeneca. So yeah, these are the opportunities and threats when it comes to the business.
Some very, very crucial ones at that as well. But on that note, Varsha, thanking you for joining us and taking us through the financial performance as well as the SWOT analysis for the company. But let's take this conversation forward and talk about, if not about the company, then the sector as a whole, with an analyst here. Well, we have Vishal Manchanda. He is a senior VP of institutional research at Systematics Shares and Stocks, who joins us on the show. Vishal, good morning and thanks so much for taking the time out. Firstly, Vishal, do you by any chance have AstraZeneca under your coverage here?
So no, AstraZeneca is not in our coverage. We track any pharma names more actively than others.
Right.
So we only track them. The only MNC we have in our coverage is Pfizer as of now.
Right. Right, Vishal. So then let's talk about the oncology space, since AstraZeneca is major on this. Your view on the entire sector and how are you looking at potential opportunities for the Indian pharma sector in this area?
So if I look at the IPM, the fastest growing piece within the Indian pharma market is oncology. And AstraZeneca probably aligns well with that. So their largest piece within their domestic portfolio is oncology. As you had kind of displayed this earlier, about 60-65% of the sales for Astra is coming from oncology. And potentially, if we kind of go down 3 years from now, oncology would become even more dominant within the AstraZeneca portfolio. This should probably be around 80-85% of their sales 3 years down the line.
Okay.
And they probably have the largest portfolio as well in terms of the number of number of diseases that they address with their portfolio.
Vishal, it's interesting that you said that, because I was also curious about what they would do with their cardiovascular portfolio as well. How do you think that could pan out in general overall?
So I don't think they have too many introductions to be done on the cardiovascular or the diabetes side. Most of the introductions they're getting in India are on the oncology side. So I don't think this portfolio is going to kind of grow the way the oncology portfolio is going to shape up. This probably will be driven by the existing drugs in the portfolio they have. So one of the large drugs on the cardiovascular side with AstraZeneca is a drug called Prelenta that's used for a treatment post myocardial infarctions or probably angina.
Right. Vishal, can you give us the lay of the land for the entire sector in India when it comes to oncology? What kind of exports happen from India, especially from the listed space? How much of this business is in India, is domestic oriented? Can you give us a better idea about how this could also potentially grow over the course of the next few years?
So oncology is an unmet need in India. What we have currently in oncology is largely the old chemotherapy drugs that are more often used to treat patients because they're more affordable. While if you look at the global landscape of oncology, the treatment landscape is evolving. We are seeing more potent drugs coming in, but since these are very expensive and may not be affordable by most Indian patients, probably we also lack a reimbursement system around oncology. We need a specialized reimbursement system for treating oncology conditions. So all of those things, as these systems evolve, we'll see oncology becoming much larger than what it is today. But primarily, if you look at things on a volume basis, the Indian generic companies dominate the space. But from a growth perspective, the MNC pharmas are dominating the category, the oncology category.
Well, point taken, Vishal, for that. And on that note, also thanking you for joining us in this brief conversation around AstraZeneca. Of course, I know that you don't have this under your coverage, but you have still given us plenty of insight into what potentially could pan out for this particular company going forward. In fact, my colleague Haripriya Haripriya spoke to AstraZeneca and the management of the company, and this is what she had to say. Listen in.
This is a beautiful campus that you have here. Give us some idea about this place. Tell us a little bit about that and also about the 45-year journey that you've had in this country. For 2024, it's 45 years that you clock in. So how has the journey been so far?
Absolutely great. First of all, let me welcome you to AstraZeneca operations in India. This is a huge factory in which we are here today. But we are just to start with, we have been a very humble beginning in 1979. And the purpose of us has been to bring innovative medicine and pushing the boundaries of science to make a meaningful difference to our patients across our country. So in the last 45 years, we have grown steadily but also strongly to bringing those innovative medicines to our country. So our are over the past 45 years, we have two entities now. So let me talk about the first entity, which is AstraZeneca Pharma India Limited, which comprises of a commercial organization, this operations, which is the factory, and a clinical trial organization. And all these three put together, the objective is to push the boundaries of science to bring innovative medicines to our country. The second part is this operations which you see here, and also the clinical trial which we are doing in India to understand local patient unmet need in our country. Then the unlisted part, which is AstraZeneca India Private Limited, is now celebrating 10 years into AstraZeneca in India. And the idea there is to bring innovation and technology, which is very important to bring innovative medicines faster. And that houses R&D, it houses global business services, and a technology center serving not only in India but across the globe. So put together, we had a very, very strong strengthening footprint for AstraZeneca in India. And with Bangalore and Chennai, our key hubs here, we now house more than 4,000 people across our country. So great journey, and we feel really proud the way we are making a difference to the patients in our country.
Let's get the cliches of the numbers out probably for starters. Tell us about the quarter that went by. We saw there was a rise in revenue, and the profit saw a little bit of a dip. So give us a sense of that, and how should we read into this?
We have been growing, as I said, very strongly. If you see, we have grown our total operations on revenue by 31%, which is a great growth both for the quarter and also the first half, which is quarter ending the September of this year. So we have done upwards of 795 crores as a business, and profit before exceptional items from 93 plus crores. So which is clearly demonstrating that we are bringing innovative medicines faster to India. And our growth is actually coming from oncology, growth is coming from biopharmaceuticals, and a recent introduction for rare disease in our country. So good 31% growth for the quarter and for the first half of the year. And we really proud to see the innovative medicine coming to India, which is helping to drive this growth for the company.
Give us some sense of AstraZeneca's portfolio in India. How does it stand in terms of the patented medicines and the ones under the price control?
So overall, AstraZeneca is globally, and the same in India. We play in 5 therapy areas. So one is oncology, which has cancer drugs. The second is biopharmaceutical. Within that, we have cardiovascular, renal metabolism, and respiratory diseases. And then we have vaccine and immune therapies. And then we have recently introduced rare disease into our country. So now we have all the therapy areas which global has in the country. And for each of these therapy areas, we are bringing the innovative medicines. There's some medicines which are also innovative medicines long back launched in the country, some under our price control, but most of it is towards the patented drugs as of now.
There's this sense that AstraZeneca is moving more into the specialized portfolio now, trying to build more around that itself. So give us a sense of that in terms of what is the outlook and the vision that you see going forward in terms of building the portfolio there.
So again, the purpose of pushing the boundaries of science and bringing the medicines and making the meaningful difference. We go where we can make a meaningful difference to patients. We really believe that the huge burden of disease is increasing, and science is the answer to unlock the disease burden in the country. And what we are trying to do is our innovative medicines, which is oncology, which is biopharmaceutical. Within that, we have monoclonal antibodies, we have biologics, which are coming in, we have rare disease. We see a portfolio going towards the specialist disease areas. So what we have taken a strategic drive is to ensure that these innovative medicines, which are high science, and this science needs to be shaped at a specialist level, and which can make the most meaningful difference. We believe specialist organization will help us do there. And the science which is coming globally is not only about the products, but also the platforms, which is like antibody drug conjugates, monoclonal antibodies, cell therapy, and in future radio conjugates. So all of that is helping us to ensure that we are on a path to bring those innovative medicines faster to our country and make the meaningful difference to the patients of this country by being more specialist disease area led organization.
That sounds great, sir. A lot of innovation happening, a lot of thoughts going behind this. Talk to us a little more about the campus, probably. What else can you show us around here? Is there a lab that we could go to and check out?
There is so we have the full campus. As you can see how green it is, and we are ensuring that we keep the sustainability is one of our passions. So both bringing science and sustainability in everything we do. As a sustainable ambition we have is to make carbon zero by 2025 as a company, and also carbon negative by 2030 as an organization. I won't be able to show you, but there's some solar panels across to ensure that we are using the solar energy as much as possible. That side is the lab there, and here is a canteen and the offices that side. But you could see how green the whole campus is, to create an environment for our people to work, but also enjoy the environment and feel good about it. Yeah.
Probably we could get a run of your lab then. Let's
Sure.
go.
Yep.
Probably we could talk about the recent Mankind Pharma collaborations that you did. That was for the anti-asthmatic drug, I believe. So tell us a little bit about that. What have you gained from that synergy? What kind of move was that? How does that help you?
Yeah. So as I said, that we want to push the boundaries of science to deliver life-changing medicines, and that's the purpose of our organization. And we are bringing innovative medicines to our country. But once you bring into the country, we need to ensure that this is accessible to a larger population across the world. So on one side, we are shaping the market for new medicines. Some of our innovative medicines are first time for which there was no treatment, and there's new treatment altogether. At another point of time, we want to ensure that our medicines can get more access across our country. So this was one partnership which we did for one of our molecule, which is for asthma, and this is for ensuring that more people can access our innovative medicines by partnering with a company who has a larger reach and access. So we focus on bringing innovative medicine. At the same time, we also ensure that there's a partner who can help us reach. So this is budesonide formoterol with a simple device which is in both, and it's simple to take by the patient, and there's a better deposition for that. So we believe that we are focusing on innovative medicine, but we're also trying to ensure that there is a good access to our medicine. This partnership is helping us to reach more number of patients by partnering with the Indian company. And Mankind is a great company in terms of their reach, and the number of physicians they cover, and adds a good equity in terms of the doctors for respiratory they are covering. So this is helping us to, again, improve the access for our innovative medicines in our country.
And there you have it. That was Sanjeev Panchal from AstraZeneca India. And with that, it's a wrap on the first edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your...
Hello and welcome to Hot Money. I'm Hiral Dadia, and with me is Anushi Vakharia. Overall, if you see in terms of markets go, let's quickly pull up Nifty 50. You're seeing little gains. 24,150 around is where Nifty 50 is trading at. Pretty much on the borderline, but you've seen a day's low of 24,008. So there has been a recovery from the day's lowest levels, but pretty flattish moves is what you're seeing. If you see in terms of the advance decline ratio as well, 28 advances and 22 declines is what we're seeing right now. Let's quickly put up Bank Nifty on the screens as well and see what the financials are doing in trade today ahead of the RBI monetary policy that will be in key focus. Let's quickly pull up Bank Nifty right now as we speak. because the advanced decline ratio, as the stats are indicating, is favoring the bulls. But there you go, 260 points is the kind of cuts that we're seeing with regards to Bank Nifty, 0.5% downtick coming in there. If we can have the sectoral heat map as well as to what's keeping the markets under check in today's session, apart from the financials, there you go. If you see in terms of, I mean, that's the market heat map, but you have Nifty Energy, which is on the downtick, Nifty Bank, Nifty Oil and Gas, Finance, private banks. These are the only sectors which are losing out. But on the gaining end, you have Nifty Real Estate, the top gainer in today's session that we're seeing. Nifty Media is up in trade as well. Pharma seeing some smart moves. Auto up around 0.7%, though it has been a pretty mixed bag in terms of where auto sales numbers go. In terms of stocks, Grasim, the top gainer today, 3.5% up move. Ultratech Cement, Shriram Finance. In fact, Shriram Finance has been seeing a good move in the last couple of trading sessions. Maruti on the back of auto sales numbers is up around 2%. Dr. Reddy's is up. HDFC Life has been trading under pressure. NTPC, BEL, L&T, as well as an IndusInd Bank. These are a few of the top losers in trade today. So that's what the benchmarks are looking like as we speak. Anushi, what are broader markets indicating so far? Are they in tandem with the large caps?
Now, Hiral, if you look at the broader market indices, they're clearly leading the race in today's rally. Now, we are seeing about 0.55% of gains in both the small cap and the mid cap indices. Some of the counters which are leading to this gain is Dixon Tech, a clear winner in today's constituents in the mid cap space. If we are looking at this, is after the announcement that they are going to be responsible for the Google Pixel mass production of that, with the Compal along with that. Other than that, we are seeing some constituents like Torrent Power, JK Cements gaining 4 to 5% of gains in trade today. Even a Patanjali Foods, if we look at, that is also in focus with about 3% of gains that we are looking at. Phoenix Mills and Macrotech Developers, both of these had recent updates coming in over the weekend, and we are seeing a 3% gains on these counters as well in the mid-cap space. But coming to small-cap space, now even that is in session, even that is in focus, about 0.5% of gains that we are looking at for these ones also. If you're just looking at some of the names that is pulling up the small-cap indices, we have Inox Wind with about 9% of gains in trade today. Cochin Shipyard, now this is after a huge order win that we've looked at, it's locked in a 5% of an upper circuit. Happiest Minds, Pyramid Pharma, some of the other counters which are in focus today with about 4% gains. But Hiral, from there on, let's discuss some of the key themes for today. Can you emphasize more on that?
So let's quickly look at the key themes in today's session. Firstly, you have big order wins coming in there. RVNL, Cochin Shipyard, KC International and KPI Green, that will be in focus. Anushi will take us through all of them. Pharma stocks gain on acquisitions and regulatory nods. In fact, not only pharma, you have healthcare companies also that will be covered in this. Adani Greens has soared after Gautam Adani's speech. That's the other one that we will be focusing on. Auto numbers, a pretty mixed bag. Puneet will take us through what's happening on that front. And you have FMCG, which is the key one, because there hasn't been an impact of higher palm oil prices on the companies that use palm oil. We will be joined by an analyst as well to decode this for us as to what will be the impact in the second half of the year. And you have brokerages of the day, two stocks that we will be talking about as well, Petronet as well as Anantraj. And lastly, you have rupee that hits a record low against the dollar. Pallavi will be joining us with more on that front. But moving on, Anushi, clearly, in terms of order wins, a good amount coming in today.
Absolutely. A bunch of these, a clutch of names that we are looking at, which are in focus on the back of some order wins that we are looking at. I'll start off with KC International in focus first. Now, this is one counter wherein the last week we've seen a couple of order wins coming in. If you look at the latest update, 1,040 crore, and this is from its international transmission and distribution business, wherein the company will be responsible for supply of towers, hardwares and poles in America, which takes a year-to-date order intake to about 17,300 crore, which is about a 75% growth of last year's levels. Even in recent updates, the company had received another 1,704 crore of an order for its transmission and distribution business. Clearly, what management had said about the transmission and distribution business, that has remained in focus in terms of orders that we look at. Moving on to HG Infra now. They have been qualified as bidder for a 250 megawatt of a battery project, and this order they've received from Gujarat Urja Vikas Nigam for a tariff-based battery energy storage system. Execution period for the same is 18 months. Even in its recent updates, the company had received an award from NTPC Vidyut Vyapar Nigam for setting up a standalone battery energy storage system. Now, coming to Cochin Shipyard, the shares in this counter, 5% of gains is what we are looking at. This is after it has signed a contract of over 1,000 crore with Ministry of Defence, and this pertains to short refits and dry docking of the large Indian naval vessels. Estimated duration time for this project execution is around 5 months. Coming to KPI Green now, it has received a letter of award from Coal India Limited, and this is for setting up a 300 megawatt of alternate current ground-mounted solar PV plant at Khavda, Gujarat. Just going through some of these railway names quickly, Railtail, a 10 crore of an order win that we are looking at, and RVNL, again in focus with about 640.
Terminal expansion from 17.5 to 22.5 MMPTA, which will be completed by March of 2025. The company is also going to have better pipeline connectivity of their Kochi terminal by mid of calendar year 2025, and it also stands to benefit from the delay in commissioning or the ramp up of other competitive terminals, LNG terminals that are going to come on stream. UBS has also mentioned a strong balance sheet, and they've stated that the company's aggressive capex plan will have only a limited impact on the dividend payout of the company, so that's something to watch out for. And it's also mentioned how the company has a strong cash position as well as improving internal accruals.
Stay with us. There's another stock in focus on the back of these brokerage notes that we are looking at, and this is MK, wherein it has initiated a coverage on Anant Raj with a buy rating. Mika, what is happening with Anant Raj? We are seeing a lot of focus coming in from the data center business, and from 26, 27 onwards, a strong pickup. Can you expand more on this as well?
Yeah, that's right, Tanushi. They've actually set the target price at 925 rupees, implying a 37% potential upside from the previous close. Now, one, they mentioned the benefit of land banks. Now, the company has a good launch visibility for the medium term because of their low-cost land bank and the scope to add more. They already have 220 acres of land parcels and a planned pipeline of 7,000 crores. And the land availability that the company has also offers development potential of 10,000 crores additionally. And these land banks could drive their bookings and collections to grow at an 18 and 39% CAGR over FY24 to FY27 as per MK. And this would also help in generating healthy cash flows. And the real estate business could witness strong cash flows over the same period. Next is the potential in data centers, which is something that the company is also banking up on as it plans to scale up in the next 4 to 5 years. Now, MK expects the data center capacity of the company to rise to 102 megawatts by FY27 versus just 6 megawatts, which are currently operational. The company's access to land as well as civil structures also gives the company a cost as well as time advantage when you compare it to peers. MK states that the company's data center revenue will be at 32.4, 300 and 850 crores by FY25, 26 and 27, and then the EBITDA and the net profit of the company could rise to 600 and 300 crores respectively by FY27 versus nothing right now. Lastly, they expect the data center business to have a range-bound margins of 75 to 80%.
Right, so that's with regards to where Anant Raj is concerned. So clearly, if you see in terms of real estate companies as well, interesting moves that we are watching out for. Two stocks that we should be just picking up right now, which have just reported auto sales numbers as well a couple of minutes ago. You have Atul Auto. Let's pull up that one on the screens and see what that counter is doing in trade. There you go. In terms of where Atul Auto goes, you've seen a good spike. The stock is locked in upper circuit. In fact, if you see in terms of the total sales, a growth of around 24 to 25% coming in there at around 2,828 units is what we've seen. It's the total domestic sales which have seen a growth of around 19 to 20% in terms of where Atul Auto goes. Strong moves coming in on that counter. Apart from Atul Auto, you have a SML Isuzu also. Again, a small player, but they have reported numbers as well. A 16 to 17% up move at 539 units is what we've seen. Sorry, it's down 17% at 539 units. The stock has seen a downtick. 2 to 3% is the kind of cut that we've seen with regards to where SML Isuzu is concerned. And apart from this, if you see Kotak Mahindra Bank, that stock is in focus as well. 1.58 million shares have traded in a block deal. Let's pull up that one on the screens and see if there is any impact on the stock, around 0.7 to 0.8% lower. Adani Ports, that's another one to focus on as well. These are just...
That's right. The Indian rupee has weakened to a fresh record low, and this is broadly following Donald Trump's comments or essentially a threat to impose a 100% tariff hike on the BRICS countries if they happen to discontinue using the dollar. The rupee is depreciated by almost about 1/5% in just about a day to trade at a record low of about 84.68 odd levels, and it had closed at about 84.49 on Friday against the dollar. What Trump essentially had to say was that he needed a commitment from BRICS nations that they will not create a new currency as an alternative or endorse any other currency in a bid to try and replace the dollar. Meanwhile, the dollar index too gained strength following Donald Trump's comments. It's been trading at about 106 or slightly above that because of his comments. But let's also look at how we're currently placed compared to the other BRICS currencies. While the Brazilian real and the Russian ruble have remained flat over the course of the last day or so post Donald Trump's comments so far, we did see some movement or actually further depreciation, steeper depreciation than the rupee in case of the Chinese renminbi as well as the South African rand. Going forward, of course, there are a whole host of cues that we're going to be watching out for in the very near term. First up, of course, is the RBI MPC that we will find the results of on Friday. Meanwhile, we're also going to be hearing from Jerome Powell over the course of the week. And all of this is before the Fed meets mid-December to announce its next rate cut decision. So clearly a whole host of indicators that we're going to be watching out for that are likely to continue to impact the rupee. And let's remember, just to put this in quick perspective, we did see GDP growth as well in case of India come in at a 7-quarter low, and that does add pressure to the central bank policy meeting as well.
Thanks, Pallavi. In fact, I'll just correct myself. Instead of a 84.68, I just read it in the reverse way. So that was a correction with regards to where the Indian rupee goes right now. That's where it's trading at. But clearly, it's depreciated to record low as well in today's session against the dollar. But completely out of time. With that, it's a wrap on this edition of Hot Money. A thank you from Anushi and myself. Lots more lined up on the other side. Please stay tuned.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trend.
Markets trade flat. Nifty IT and Pharma show marginal gains. PSU banks lose slight ground. Adani Green shares surged 9% after Group Chairman Gautam Adani says attacks strengthen the group and that obstacles are stepping stones for resilient growth. No road and infrastructure cess on petrol and diesel exports. The government also scraps windfall tax on ATF, petrol, diesel exports as well as petroleum crude production. Cochin Shipyard stock hits upper circuit after Ministry of Defence seals INS Vikramaditya refitting contract with the company. November auto sales a mixed bag as two-wheelers perform well while four-wheeler passenger vehicles struggle. Maharashtra CM decision to be taken today in BJP Legislative Party meeting confirms caretaker CM Eknath Shinde. Hello and welcome to NDTV Profit. You're watching Market IQ. My name is Rucha Somaya and we are going to have a quick look at the markets first. Well, it seems to be a mixed trade for the market with Nifty 50 trading at about 0.22% higher in trade as we speak. Sensex also up at a similar level. Nifty Bank seems to be a little volatile today, down about 0.4% in trade. Nifty IT up 0.4%. But if we look at the sectoral heat map, we'll see that Nifty Realty is the top sectoral gainer. However, it's Nifty PSU Bank which is the top loser. Another losing sectors are Nifty Bank, Oil and Gas, Energy, and on the gaining side we have IT, Metal, Auto, Media as well as Pharma. But we'll move on to talking about the constituents of Nifty 50. Well, down in the red we have HDFC Bank, L&T, NTPC, Kotak Mahindra dragging the index down. But on the positive side, we have Reliance, Infi, as we can see on our screens, Ultratech, M&M as well on the back of good auto sales numbers over the weekend. But if we look at Bank Nifty constituents, we'll see most of the constituents of the index are trading in the red. Likes of IDFC Bank, PNB, IndusInd, Kotak down in the red, but in the green, although marginally in the green, we have ICICI Bank and Bandhan Bank as well. But if we move on to talk about Nifty IT, well, this one is doing good in the trade today. L&T Tech is the only losing stock, down about 0.7% in trade, but the top gainers are largely the mid-cap names. Tech Mahindra, Emphasis, of course, Tech Mahindra is a tier 1 name, but largely on the tier 2 side, we have Emphasis Persistent, which has gained about more than 1% in trade. But a few stocks, a few auto stocks, which I would like to talk about on the back of the auto sales numbers that had come out over the weekend. If you look at the Nifty Auto, it is trading 0.8% up as we speak, 143 points up in trade. Highest gainer is TVS Motors, up about almost 2%, followed by M&M. M&M being the gainer on the back of good sales numbers. Bajaj Auto is also the one which has reported good numbers over here. But on the losing side, we have Ashok Leyland auto numbers which have largely missed the estimates. And I'm talking about November auto numbers. Just for the context, Tata Motors, Hyundai also down about 1.5%. Escorts also down 1.2% around. But lastly, talking about a few stocks to watch which are buzzing on the back of news, we have RVNL. If we can have the stock chart up on our screens, we'll see that the stock is buzzing in trade, up about 0.4% right now. Well, it was up during the start of the day on the back of an order win, but now have seemed to have been given up on the intraday gains. Profit booking is what we could see over here. Dixon Technologies up around 5%. On the back of a contract of manufacturing Google Pixel. Since the start, it has maintained its consistency of outperformance since Friday's close, up by more than 5.5% is what we could see over here. Moving on to Cochin Shipyard, 5% up because it has signed a contract of over 1,000 crore with the Ministry of Defence. Oh, upper circuit over here is what we could see. Anant Raj, lastly on my list, is the stock which has gained about 4%. As the brokerage house MK has initiated a buy with a target price of 925 rupees, 37% upside, consistent outperformance since the start of the trade. But let's move our eyes to the rupee. Well, the rupee is at its lowest level since 26 June. Now, this fall is on the back of US President Donald Trump's post on Truth Social warning BRICS nations against adopting a new currency instead of the dollar. My colleague Pallavi is here with me and she is here to explain on what is going on. Pallavi, just give me and our viewers a context on why is rupee depreciating.
Right, so we've seen the Indian currency actually weaken to lifetime lows and that's predominantly on the back of comments that came in from Donald Trump, essentially threats imposing 100% tariff on the BRICS countries if at all they do discontinue the dollar, since we've seen the rupee depreciate almost by about 0.25% to trade at record lows of about 84.6 169 odd levels. That's against the US dollar. The rupee had closed at about 84.49. That was on Friday against the dollar. Now, what Trump essentially said was that he needed or demanded a commitment from the BRICS nations that they will not create a new currency as an alternative or endorse any other currency in a bid to try and replace the dollar. If at all that does happen, the US would impose 100% tariffs on the BRICS nations. Now, what's also weighed on the Indian currency is, of course, the continued outflow of domestic stocks. We have seen the rupee on a depreciating bias even in previous weeks. Meanwhile, what's been happening to the dollar index is we've seen some strengthening there post Donald Trump's comments. It's currently roughly about 0.5% higher, trading at about 106.26. What we should also keep in mind is that compared to other emerging economies and specifically the BRICS nations, India's currency, while it has been depreciating, it is actually not among the worst performing ones, whether that's on a monthly basis or on a more short term, just looking at BRICS currencies post Donald Trump's comments. We've actually seen greater depreciation, both on the Brazilian, on the South African rand as well as the Chinese renminbi. What we're going to be watching out for going forward is a whole host of cues coming up over the next few weeks. There's, of course, the RBI MPC that will announce its resolution on Friday. Before that, we're also going to be watching out for Jerome Powell's comments regarding what the Fed is likely to do. The Fed, of course, is scheduled to meet mid of December. So a whole host of data to be watching out for and its impact on the rupee. But for more details and for his perspective on the rupee, let's go on to Anindya Banerjee, Senior Vice President. So Anindya, thank you so much for taking time out for us. So, first up, I do want to understand, like, there's a whole host of cues that we're going to be watching out for over the next few weeks. This is at a time when we've already been seeing the rupee continue to hit fresh lows over the last few weeks. What is the near-term trajectory looking like at this time? And I know that there's a whole host of indicators at play, but what is the range that you're looking at for the rupee going forward?
Right. See, the path of least resistance for the Indian rupee against the dollar is downward. So we could see further depreciation of the Indian rupee against the US dollar. The factors are, of course, the FPI outflows, which are happening. And on the FDI side, it is still weak in the sense that the flows are not that strong to compensate for the outflows from the FPI side. And that's the one of the major factors. Apart from that, globally, there is a selling across emerging market currencies because everybody is waiting for the inauguration of Donald Trump as the president of US, and we had seen a similar move in 2016 too. So if you go back to 2016 November and December. In those 2 months, also the Indian rupee had depreciated, the dollar index had appreciated. But in January, we had seen a complete reversal. That doesn't mean that's exactly what's going to happen this time, because this time the expectation that US will be far more protectionist and decisive in its actions on tariffs is quite high. But if you consider the path of the Indian rupee against the dollar, we continue to believe that it's going to be on the downward. And we could see levels of 85 by end of December.
Okay. So a whole host of factors at play, but we're looking at possible levels of about 85 against the dollar end of this year. All right, I do want some perspective here. We've seen the emerging markets currencies continue to depreciate against a strengthening dollar. The rupee has shown a fair bit of resilience for the most part. Is that the expected trajectory going forward as well? How much is the RBI expected to continue to intervene?
Right. Yes, absolutely. You're right. So if we look at some statistics, very interestingly, if we consider the annual volatility of the Indian rupee or USD NR, compare it against how the other currencies have done against the dollar. Indian rupee is one of the least volatile currencies in the world this year, even after the depreciation almost towards 85. So the reason is simple. RBI is intervening quite aggressively, and they have been at this for a long time, and they have explicitly stated that they continue to target volatility because they believe that volatility is a far bigger macroeconomic variable than the absolute level of the Indian rupee. So yes, I agree that RBI is going to intervene. We expect them to intervene on both sides of the market, up and down. And at the same time, we could also see the RBI utilize its reserves because they have almost $680 billion of reserves. So the ample reserves are there to utilize it and to ensure that the volatility is low.
Okay, all right. So while we do expect some kind of a pressure to continue to persist in terms of the rupee going forward, I do want to take a step back and get your perspective on what the medium-term picture looks like. I mean, we're living in interesting times. So we've been talking about the possible repercussions once Donald Trump, takes over the American economy. What we will see playing out in terms of the Chinese currency, the tariffs imposed there, and in turn, what kind of an effect that will have on India's currency and export competitiveness. So, I mean, what are you looking out for over the coming months? And what do you think, I mean, how do you expect this to play out for India?
See, if you look at the current statements from the Trump administration, it's pretty clear that US is going to move on certain aspects. One is, of course, higher tariffs. And we could see higher tariff and non-tariff barriers. So the global trade, we expect it to fracture a lot. And secondly, they are looking at making the economy less bureaucratic, which means they will come down heavily on the government expenditure, on government employment. And we have to remember, in US, the largest employer is the US government. So if that kind of area is attacked and there is a significant reduction in the headcount, yes, it will be quite positive for the economy because it will remove the red tape. But at the same time, what happens to those people who are now facing unemployment? How are they absorbed in the real economy? At the same time, there has been a talk of reduction of the taxes in America, the corporate taxes specifically. So that will mean that they are trying to make America attractive manufacturing destination, a destination which is going to not be so available to the world in terms of trade, which will also have global implications because it's not just that America can only erect tariff and non-tariff barriers. We could see other countries retaliate. That's point number one. And finally, if America has to focus on manufacturing within America, they have to at some point in time look at the currency, because at the current dollar exchange rate, it is very overvalued, and it will be very difficult for them to create a sustainable or a large-scale manufacturing base with such an expensive currency. So we could see some kind of action on the currency as well, because we had heard about such things in the term one, when 2016, when Donald Trump had come in, that he had talked about a weaker dollar. So we believe that later down in the year, we could see some action on the currency front as well. So which means if I take all these things into consideration, it means that 2025, the currency market is going to see some huge volatility. Like 2024 was a calm period. 2025 could be highly volatile for the Indian rupee as well.
High volatility is what our viewers should watch out for. But thank you so much, Mr. Banerjee, for those wonderful insights, and Pallavi as well. Thanks for joining in for this conversation. But we'll move on to a big market voice with Donald Trump going all out on the tariff war. Here's what AND's Research Asia head Khoon Gu had to say. Listen in.
We have to distinguish between the dollar as a reserve currency and the currency fluctuations. The dollar will remain a reserve currency, but that doesn't mean the dollar can't weaken. We've seen that time and time again. After all, the dollar does move in cycles. So at the moment, the dollar is extremely strong because of the tariff threat and the fact that the US economy is doing exceedingly well. But we do expect the Fed to still deliver another rate cut in December. And I am still of the view that the easing cycle is not done yet. So I think we're going to get further rate cuts from the Fed next year. I think that should help some moderating impact on the dollar. We expect the dollar, to ultimately still be beholden to the wider Fed policy. And on top of that, in terms of the U.S. economy, if the tariffs do get imposed as what President-elect Trump is threatening, that's inflationary, but it also can have a softening impact on the U.S. economy as well, which might start to pull the dollar slightly weaker. Lots of moving parts, of course. I think the only thing that's certain is that we are in for a period of heightened volatility.
Well, on to the next big news. We have India's GDP for second quarter FY25, which grew at the slowest pace in 7 quarters, prompting investors to lower their forecasts for the full year despite expectations of a recovery in the second half of the fiscal. Well, the DEA Secretary, Mr. Ajay Seth, said that there is nothing to worry about. Well, he said that higher growth will take place in the second half of FY25. Listen in.
The numbers are... It's not an alarming. Numbers are lower than what our potential is, and action is well on the way to make sure that the second half of the current financial year, the numbers GDP growth rate is expected to be much better, and several high-frequency indicators in the month of October are pointing towards that.
So we see a revision in the coming rest of the year. We see a revision in the numbers, sir?
No, first of all, these are estimates. We have seen it in the past that quarterly estimates have...
be volatility, and therefore this is the messaging. It could well be different as well, in which case you need to change your investing style, so on and so forth, with regards to our investing components within your portfolio as well. But Mohit, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
My pleasure, Neeraj. Thank you.
And viewers, thanks for tuning into this leg of the Mutual Fund Show.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Okay, thanks for tuning in to India Market Close, and a quick check on what the markets are doing. Well, it's an afternoon of recovery, and therefore it pays to look at some of the small cap buzzers in the session today, with the Nifty being what it is and the small caps also doing reasonably okay. Anushi joins in with some of these and the reasons, possible reasons thereof. Anushi, price, volume, buzzers, there might be some news as well. Take it all away.
Thanks for that, Neeraj. So, as you've mentioned, there are a couple of counters that are buzzing on back of volumes and some news flow which is happening today. The first one on the list is Home First Finance. Now, what we are looking at is 29 times the volumes as compared to its 30-day average, and this is with a 7% of a intraday low that we are seeing. This is after media reports suggesting that True North Orange Club Aether Fund is planning to sell 14.7% of stake via block deals today, with the estimated block deal size of about 1,267 crores. So if you look at what Bloomberg had also suggested, that Home First just had a block deal worth 9.3% of equity. Now coming to CanFin Homes over here, 8.6 times of volumes, about 1.2% of an intraday high. So it's not really on the stock price movement that we're looking at, but on higher trading volumes, why this one is buzzing. Coming to Inox Wind, 7.5 times the volumes, and this is with an impressive stock return of 9.8%. Now, if you look at all Inox Group companies, they are buzzing in trade today after the subsidiary has entered into an agreement to sell the entire issued and paid up capital of Elianto Wind Energy.
And thanks so much for joining in, both of you. Rucha, let's start off with you. CE Info, and why is this in focus today?
Right. So, Neeraj, there's this news from CE Info Systems wherein the CEO and Executive Director Rohan Verma will step down from MapMyIndia and form his own new company. Now, this new company will focus on the B2C segment of MapMyIndia, and this new company will also utilize the Mappls brand, which is MapMyIndia's retail brand. So, essentially, the CEO will come down and form his own company and use the proprietary Mappls, which MapMyIndia has built on itself. Meanwhile, MapMyIndia will focus on its B2B and B2B2C segment. Now, talking about the investment that MapMyIndia has made in this new company, MapMyIndia will acquire around 10% of the stake for 10 lakhs all in cash, and will also provide an additional funding of 35 crore rupees. Rohan Verma, meanwhile, will hold balance of 90% stake in this company and will also continue to be the non-executive director on the board of MapMyIndia, and all of this will come into effect from 1st April 2025. So essentially, Neeraj, this seems like the CEO stepping down from his own company, forming his own new startup, and the funding is given by the MapMyIndia company. Now let's look at the stock price performance. Well, MapMyIndia has not done really well over the last 1 year, underperformed by over 24% in last 1 year and underperformed by about 12% in last 6 months. So this is the new update, and today the stock is down about 3.5% as we can see on our screens.
Yeah, with all the growth that the CE Info Systems has shown over the past few quarters, it is just a tad bit surprising that we are in fact looking at a 23% decline in terms